The Mortgage Brokers Association is worried about this. They deal with customers directly who don't go through a bank, and they're worried about particularly the mental health aspect, that some people are going to suffer through this. Peter White is the CEO and joins us. G'day, Peter.
G'day, Clinton. How are you going?
I'm good, mate. Look, I'm probably lucky personally because I've been in the market for about 15-odd years. But I've got to say, I do feel for people who may not have that buffer that us older mortgage holders have.
Yeah, it is a real concern for those people that don't have that buffer. And it's in these times that we start to see the cracks to well and truly appear. And, people not doing it that easy. And it's disappointing. Unfortunately, the RBA looks at, economic data and forget about the human data that's under this as well.
So your organisation, you represent mortgage brokers, so people who sit down with those who are seeking a mortgage. Do they get a real first-hand sense of how people are coping financially?
Oh, Clinton, most certainly. They're there helping these people to get through any trials and tribulations they're going through financially. Some people are doing okay. I mean, we can't ignore that either. But there's so many people there that trying to navigate their individual circumstances, and that is very much the case. Everybody's circumstances are individual. Home loans are home loans, basically, but the circumstances vary so much underneath it. And trying to ensure that we can do all things possible to help people to make sure they protect that roof over their head. And it's a tricky piece of work at the moment.
Because I'd imagine that mortgage brokers, they're not only seeing people when they go to buy a house, and you are recommended to do this, to refinance, maybe to find a better deal.
Yeah, refinance is a big thing at the moment. You think about the fixed rate mortgage cliff period we've been through. We peaked generally around that late July. We're still in the coming off piece of that, the end of the bell curve. There's still a lot of people coming off those really cheap fixed rates, and in for the horror shock of what today's interest rate environment looks like. So our members have been working with borrowers to sort of educate them on, say, well, work out what the higher repayment will be in the future when you come off this as an estimate. Put that money away somewhere so you get used to not living with it. We're all like, we spend what we get. I know I do. Get them accustomed to what that new repayment facility will look like. But not everybody can do that.
That mortgage cliff issue that you just mentioned there, that's a really interesting one, because the thought was, I know at the start of the year, the talk was there was something like 800,000 people who would be coming off it. But I read yesterday that perhaps the mortgage cliff hasn't been as bad as was feared. With your experience, what your brokers are seeing, is that the case?
Yeah, the experience hasn't been as bad as what was potentially being. And that was the education piece that people have been doing in the marketplace. So if we look at it from a broker point of view, is helping them to understand what's that going to look like, prepare for it now, don't leave to the last minute. But at the same token, the research we did showed that people just generally are surviving by using up cash reserves, or if they had an offset account or a redraw facility, they've used all these things up to the point now that that rubber band is stretched in to anybody, especially those if they're now come off out of that mortgage cliff period, they've still survived. But we're seeing now research from Salvation Army saying that people are in food lines trying to get food packages so that they can still afford to preserve the extra cash to make their mortgage payment.
Yeah, and that's the worry. Look, you're not a doctor, you're not a medical professional, but I'd imagine that your brokers, when they sit down with people, they probably hear some fairly, how can I say, challenging stories from people who may be struggling with mental health, with that
and
issue.
So correct. The mental health piece, again, showed out in the data that a lot of people are struggling with that. I think there's something like 20% of people under the age of 28 were having real difficulties with their mental health. But of course, we look at the borrower's mental health, and I'm not trying to take away from that, but the broking industry is suffering badly from that as well because of all that they're taking on board from all their different customers. And we're seeing, we've lost, I think, 5-6 people in 4 weeks. Just can't cope with it. It's a really difficult time for everybody. And this is where we all need to group together and work with one another and support one another. That the borrowers in this type of environment, I've been in this game 45 years, and first time I've ever seen this. It's a unique time and it's a tough time.
It's such a, I grew up in the late 80s, early 90s. So my parents come from that era where the rates hit the 17%. And often I hear from my parents' generation, my generation has got it easy compared to that. But, I mean, it is a fact, though, that as a percentage of income, mortgages are now taking a greater percentage of income, aren't they?
Correct, yeah. So back in the day, I can remember, now I'm going to sound like your parents, writing home loans at 18.5%. Back in old banking days. And, it was generally capped to around 30% of gross income. These days it's a lot more, and obviously incomes are a lot different as well, so are mortgage levels. So, in today's environment, people are paying a lot more of their disposable income away just to pay for a mortgage.
You would no doubt hope that the RBA takes a breath in December?
Oh, most certainly. They need to take a breath for a few months, to be honest with you, and hopefully then we can roll into next year in a stable environment, and in the second half year see if we can get some interest rate relief by them coming back a bit. That's my prediction.
Just lastly, from your experience of being in the business so long, do you fear that maybe increasing interest rates don't have that same effect across the board in terms of controlling inflation?
Yeah, that's a very interesting piece that we've, I guess, aged as an economy, is that this is the old way of controlling it. Are there other factors that we need to be considering as well? Part of the discussion at the moment is around government's infrastructure expenditure, although that hasn't happened yet. But is that something that needs to be a more planned style of approach to the economy rather than sort of giving it great speculation and hype that revs it up? And I think the dynamics now these days is far greater than what we ever perceived in the past.
Certainly tough times for a lot of people at the moment. Peter, I thank you for your time.
Pleasure, Clinton, anytime.
Peter White, who's the Managing Director of the Finance Brokers Association of Australia.